This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, February 16th, 2015. So no change to the euro direction just yet, with the market locked with a consolidation off recent 11-year lows at 10.98. 12.65 is what defines support below, while 15.34 is what is defining resistance above. A break above 15.34 would open the door for additional corrective action, potentially back up towards the 17.50 area, with the market ultimately seeking out a lower top below the 50-day moving average ahead of the next major downside extension and bearish resumption. Really only back above the 50-day moving average would compromise the current bearish outlook. Sterling dollar. So cable continues with its correction, with the market now pushing into next key resistance zone between 54.85 and 55.90 above. But the downtrend remains firmly intact, and the lower top is now sought out somewhere ahead of 156 in favor of the next downside extension back towards the recent 2015 low at 49.51. Dollar yen. So dollar yen had recently broken out of some key triangle resistance, with the break putting a retest of 121.85, the 7-year high from December, in focus. But the market has since retreated back towards that previous triangle resistance, now turned support, and is back within a well-defined consolidation over the past several months between 115.55 and 121.85. At the same time, the bullish trend remains firmly intact, and only back below 15.55 would compromise this bullish outlook. Euro Swiss. Since collapsing in the previous month, Euro Swiss has been locked within a consolidation, now between 104.15 and 106.45. A break above 106.45 would open the door for the next upside extension towards 110, while back below 104.15 would take the immediate pressure off the upside and potentially expose renewed downside. Aussie dollar. So Aussie dollar is in the process of consolidating off recent multi-year lows at 76.25. There is the possibility for additional corrective activity if the market can take out 78.76, which would open the door for a push above 80 further up. But ultimately, the downtrend remains firmly intact, and a lower top is sought out somewhere below 81.25 in favor of the next measured move downside extension towards the 73.75 area. Dollar CAD. Dollar CAD remains locked within a firm uptrend, with the market in the process of consolidating off recent multi-year highs at 128. A break below recent support at 123.50 would open the door for additional corrective action towards 120, but ultimately a higher low is sought out ahead of the next major upside extension towards the 2009 peak at 130.65. Kiwi dollar. So Kiwi has recently taken out some key resistance at 74.95, with this confirming the onset of a continuation of the current correction, but the market remains locked within a well-defined downtrend, and any rallies are seen well capped ahead of 78.15 in favor of the next lower top and bearish continuation down towards the 68.55 area. Really, with this market, only back above 80 would compromise the bearish outlook. SPX 500. So the S&P 500 has finally taken out the December peak and broken to fresh record highs, still stalling shy of 2100 thus far. A break and close above 2100 would open the door for fresh upside towards the 2150 area, while inability to take out or establish a daily close above 2100 would keep the pressure or the outlook for a toppish structure intact and open the door for renewed downside. But look for a close back below Friday's low at 2085 to take the immediate pressure off the top side. Gold. So gold has recently stalled out. The setbacks have stalled out around the 1217 area, with the market now looking for a fresh higher low and resumption of the current or the newly adopted bullish outlook, since the market has been uptrending off the multi-year lows at 1131. Look for continued appreciation in this market back towards the recent highs at 1307, and then from there towards the summer 2014, July 2014 peak at 1345 further up. Only back below 1200 would compromise the newly adopted bullish outlook for gold. That's all for now.